Hello, everyone. Welcome to Korea Pavilion. The event will begin shortly. Please take a seat and we will start in a few minutes. 안녕하세요. 한국홍보관 방문해 주셔서 감사합니다. 본 행사는 잠시 후 시작하겠습니다. 各位贵宾，大家好，欢迎来到韩国馆。本活动将于几分钟后开始，还请各位耐心等候，谢谢。Hello, everyone. Thank you for coming to welcome to the Korea Pavilion. Please take a seat. Please. Session is being live streaming online, so yes, please take a seat. Thank you. So Hello, everyone. Welcome to the Korea Pavilion. I'm Yu Ting Chan, Investor Engagement Lead at Solutions for Our Climate. First of all, I'm aware that we are at the Korea Pavilion, but as most of our speakers and many of the audience and staffers here are not Koreans, this session will be conducted in English. Please also be reminded again that the session is being live streamed on the Korea Pavilion's official YouTube channel. SFOC, Solutions for Our Climate, is a climate research and advocacy group based in Seoul, Korea. We look into areas including power market and grid, climate finance, oil and gas, and industrial decarbonization, and leverage our extensive networks in the media, legal community, and civil society to drive change. In fact, this is SFOC. Starting from this January, we also began developing our investor engagement program, hoping to help accelerate decarbonization of the Korean capital market. In fact, this is SFOC's very first investor-focused event. Thanks to the beginner's luck, we are incredibly honored to be joined by some very influential institutional investors who are active in addressing climate change through either their investment strategy, such as portfolio selection, or stewardship. I'm sure you are here to listen to their insights, not me talking about my job, but please let me first quickly go through today's agenda. This session will be divided into 3 parts, beginning with welcoming remarks from Hae-young Jang, member of the National Assembly of the Republic of Korea. We will then enter the highlight of today's session, breakfast chat with Sang-hyuk Kim, co-chair of the Presidential Commission on Carbon Neutrality and Green Growth of Korea, and Michael Marks, head of investment stewardship at Elgin, Legal and General Investment Management. The 2 gentlemen will have an in-depth dialogue on climate risks and opportunities in the Korean capital market. Following that, we will have a panel discussion moderated by Jin Sung-ro, head of industry at SFOC. She will introduce our distinguished panelists at that time. And finally, we will welcome a special guest speaker before closing the session today. I hope you will enjoy this session. And without further ado, I will now pass the floor to Ms. Jang for her welcoming remarks.
Welcome, distinguished guests. My name is Hae-young Jang. I am a member of the National Assembly, and I'm in Justice Party in Korea. And I'm serve on Planning and Finance Committee and as well as Climate Crisis Special Committee in the National Assembly. It's my pleasure to be here today. I sincerely welcome all of you who are here today attending this event, Climate Risks and Opportunities, Engaging the Korean Capital Market for Net Zero Alignment, taking place in the Korean Pavilion at COP28 Dubai. South Korea is the 10th largest annual greenhouse gas emitting country in the world. And this is why some call my country a climate villain. It is not a title I welcome, but considering the reality, it is a title that is hard not to admit. There is a historical background to this, actually. The exponent economic development of Korean economy, called the miracle of the Han River, has been centered around the development of industries that emit a lot of greenhouse gas emissions, such as steel and petrochemical and other industries that consumes a lot of power, such as semiconductor manufacturing. It is the process of achieving this miracle of the Han River. We were also in the process of becoming a climate villain. Nowadays, South Korea has risen from being a country receiving economic aid post-Korean War to being a country with a clear influence on the world economy, and especially when it comes to culture. And in the midst of this development, we are living in an era of global climate crisis. as well as the Korean citizens and civil societies, labor workers, and the National Assembly, and countries around the world see South Korea's responsibility of the greenhouse gas emission throughout its economic development and the growth of manufacturing industries, calling for a rapid and comprehensive transformation of corporates and the fossil fuel industries. However, Korean manufacturing companies and the government are still showing passive attitude towards the comprehensive green transition in high-emitting industries. The same goes for the investors who provide a large sum of funds that sustain these industries and reap profits from them. The reason why we are gathering here today is bring about change in such situation. On one hand, we are people from different countries and different professions. But on the other hand, we are also screenplay writers and maybe director, scripting the global scenario for the future of humanity. Each of one of us has a common responsibility to create a happy ending. So then, how can we transform this democracy advocating Asian climate villain into global climate hero? Well, we already know the answer. It's all about shifting perspectives. We need to take climate change as our opportunity rather than a crisis. We must shift the global accumulated wealth from fossil fuel industries as a driving force for innovation to transform us into a sustainable green economy. For instance, in the finance sector, global investment institutions view climate changes as a new opportunity rather than investment risks and can exert great amount of influence in transforming the Korean industry and capital market into a net zero economy and net zero finance. And such transition is already happening. ESG has already become commonly widespread in the financial market, and institutional discussions to support it, such as the introduction of a climate disclosure system, and are already taking place on global scale. Even today here, several panelists from the world's most well-known global investment institutions is interested to discuss the sustainable growth of Korean companies and markets, and will propose several suggestions to Korea's transition to net zero finance. I will do my utmost best to listen carefully in today's session and proposals as a member of the Planning and Finance Committee and the Climate Crisis Special Committee in South Korea National Assembly, and so that the Korean government and the National Assembly can responsibly bring about the institutional and social discussion and practical changes. I would like to once again express my deepest gratitude to Ministry of Environment of Korea and Climate, the Chairman Kim Sang-hyuk, the Carbon Neutrality and Green Growth Committee and Solution for our Climate, and as well as participants from various countries for joining us today and providing this valuable opportunity. Thank you very much.
Thank you, Ms. Jang. Now please join me in welcoming Mr. Sang-hyuk Kim and Michael Marks to the stage. Thank you.
Good morning, everyone. Excellency Jang Hae-young, I truly appreciate your presence with us today. And she has been exercising really remarkable and invaluable leadership at the National Assembly and combating climate change. I truly recognize her role. And my friend Jujin, where are you? Jujin is also a great leader in Korea, doing many professional things. Yeah, I will do that. Well, so it is my great pleasure and privilege to meet you in person. Michael Marx is well-respected and great global investor dealing with climate change, actually transforming climate challenges into climate opportunities. Thank you for being with us today. Well, firstly, for the audience, not only here, but in Korea, could you please identify or define your role as a global investor combating climate change? And in addition to that, your engagement strategy with portfolio companies.
Well, thank you. Thank you for the question, but thank you very much for inviting me to be here. And thank you for this wonderful introduction. And it's great to discuss this topic because it's so critical. Elgin, the company I represent, is one of the world's largest investment managers. We manage approximately $1.5 trillion of assets. And across all of those assets, no matter what we're invested in, climate offers both risk and opportunity. The potential future of the companies we're invested in, the potential outcomes for nation states and therefore the government bonds that are issued are all going to be reliant on our future and climate driving different risks and opportunities, and we should look at both sides of this. Much of what we do will be challenging companies to think about their risks.
Okay.
And for many years, we have spoken to companies saying, do you understand the risks? Do you understand what you are exposed to? Do you understand what might happen to your company? And then over that time, and how will you drive forward? So many years ago, certainly for the last 8 years, we've been asking companies for disclosure. We've had TCFD as a standard that has become a globally accepted standard now in the ISSB. But it's taken a long time to come in disclosure. But that's only the first step. Then what are you going to do about it? So now we know what your emissions are. We know what the challenges you face. But what actions will you take? And so then we have to think about the next steps. And this is why we do what we do.
Thank you, thank you. Well, to my eyes, Korean financial sectors have been sort of not that proactive, rather than they are somewhat reactive and even conservative in shaping the future we want to have. So what would be the role of government, including my commission, to encourage financial sectors to be more aggressive and future-oriented and even act like a change agent?
So I think it's really important engaging with governments and for governments to recognize the challenge, which in fact Korea clearly has. The steps that have been taken over the last few years in first asking for and then mandating climate disclosure has been really important. If I was looking for the next step, what we have now are emerging standards of what is a transition plan. So what is your strategy? What are you going to do? Where are you on that journey? It doesn't mean you know every step of that journey, but you know what that journey is. So I'm talking to you, I represent a UK-based company. Our parent company, Legal & General, published its first transition plan last year. And in the UK, we have launched, just published, the transition plan frameworks for companies to know how to produce a transition plan. And we would hope that that could act as a lever for companies across the world, including in Korea, to look at the framework, which steps across how should you think about your transition, how should you think about what you need to do, and that framework is publicly available.
Okay. Yeah, recently Korean President Yoon Suk-yeol made a state visit to the UK and met with the King Charles, your Prime Minister, and several business and financial leaders. And at the heart of the Downing Accord we made together with the UK. Green cooperation is the key element, including green finance. UK has been leading green finance for several decades, including the notion of stranded asset and transition finance, etc. So what can we learn through the experience of the UK's green finance?
There are so many things I could say.
Yeah, so many.
No one has a monopoly on good ideas. So let's be really clear. But we have had experience. Not all companies want to listen. And we have to speak to those companies. We have to ask the question. Companies need money to keep driving their businesses forward.
And profit.
They need to make profits, but they also need the finance from the financial community and from government. And
yes, truly.
so we need to understand what are the expectations of those companies. And if they don't meet our expectations, will we continue to fund those companies? Often it's mistaken that investors like us, or like some of the others in the room, only think about the equity, the shares of the company. But that's not true. We also think about the bonds of the company. And on a day-to-day basis, those companies use the bond markets to raise working capital. If they are not meeting our expectations, if they are not getting to where we need them to be, turning the tap off on funding their working capital is one of the strongest levers that we can have. We don't want any company to go under. We don't want them to be made bankrupt, but we do need them to change. We also need to recognize that companies start at different levels. You know, it's no point me sitting here saying, well, this is a European perspective, and Europe, you know, whether we're talking about electricity generation or steel manufacturing or electronics, here's a European perspective, and we expect all companies to be at the same level. We have to recognize where do they start and where are they on that journey, and how can we help them on that journey. If we think about the change, if we think about personal change, you know, I don't know about everyone viewing online or in the room. Every New Year, I sit down and I make a New Year's resolution. If I make a big resolution that I'm not going to drink alcohol anymore, that might last me a month, maybe two, but actually it's a really hard thing to make. But if I just say, actually, I'm going to not drink for the next week, and then the next week, actually, do you know what? I'm not going to drink alcohol and I'm not going to eat sugary foods. And you build up to these things step by step. So if a company is here, then we want them to move here. We want to raise the bar for them. We have some global standards, minimum standards. But for each company, if you get to the minimum, how can we keep raising along the way?
It's great. You give me a hope. Actually, I'm a smoker. I need to quit smoking. I will adopt your strategy. Well, as you know well, coal-fired power plants have been really painful headache in Korea also, not just Indonesia, elsewhere. So yesterday I had a deep dialogue with the president of the ADB. ADB is developing energy transition mechanism that is going to try to early retirement of the coal-fired power plants. So what kind of green finance can be applied? Have you ever thought about it? Because it will apply to the case of Korea. We have newly built several coal power plants.
Yes. Well, first of all, if we take a step back, when we think about power generation, as I said, you know, we look at each company, but we also look across the markets. So if I'm looking at KEPCO, I will look at what are they doing, the coal power that they generate, but I equally will be looking at PPL in the US, or Fortum, or Tenaga. And we look at all of them and we say, where are they on that journey? What could they be doing? How can we encourage the change? If I'm talking to you in this room, KEPCO is a company that has made a lot of progress, but does still have coal power, and committed to still using, at the moment, still committed to using coal until 2050. That for us is well below our minimum standard. We want to see that phased out. We have an engagement program we call our Climate Impact Pledge. And through that, we are talk in depth with KEPCO and some of those other names that I mentioned. And across the assets that we manage, there's about heading towards $200 billion from which we will not invest in KEPCO. And it's not the fact that we don't invest in KEPCO, it's the fact that we will be public about the fact that we don't invest in KEPCO through the Climate Impact Pledge, because they don't want that publicity.
Okay, all right. Having heard that, may we know more about your engagement strategy, especially what kind of data or element are important to your eyes when making investors' decision?
Okay, so across all sectors, we follow a very structured process. And that process will think about some of the things that you would expect in TCFD, like strategy. But we'll start with, does the company have a commitment to net zero? Does it have a clear strategy around achieving that commitment? What is its resilience? What are the targets they're setting? We will think about how they collaborate across industries, across their industry. We'll think about what is their political lobbying. Are they saying one thing to the markets and to investors and to their population, and saying another thing to the policymakers through lobbying activity, which is one of the big challenges we face? We will look at other considerations. So those are the key pieces. We'll look at other considerations like biodiversity issues. What are the company levers that they could adopt? Sorry, just thinking about phrases like just transition, but are they thinking about their impact on their communities where they operate? So across all sectors, across all the world, those are the basic concepts. And then within individual sectors, and this engagement program I mentioned, we look across 20 climate critical sectors. We have very specific sector by sector expectations.
Time is running, I'm afraid. So to your eyes, what would be the potential Korean industry and companies have to the eyes of global investor?
So when we look at this, Korea has a phenomenal opportunity, and that's exactly, and as you were saying, we need to look at this as opportunity. Whether we're looking at KEPCO, I've mentioned, whether we're looking at POSCO as a steel manufacturer, whether we're looking at Samsung, and the energy they need to consume to make their products, whether we're thinking about LG, whether we're thinking, there are so many companies, the car manufacturing sector. There are opportunities to green their industries, to decarbonize their industries. They need to have clear plans. They need to think about the steps they are taking along that journey. They need to think about their global marketplace, because consumers, these are companies like Samsung selling to a global market. And it's our experience, I think everyone in this room will be saying, I want to buy products from a more sustainable company. And that trend is growing. So therefore, the more they think about, are we going to be relevant in the future, either in an industrial business or a consumer product-based business? Are we relevant to our economy, to our people, to our consumer? Then that's the opportunity that I see going forward.
Thank you. And as Her Excellency mentioned, ESG has become very popular wording. But when I took part in the Oxford Green Finance Seminar several months ago, so the world is going to pay more attention to E, including climate-related area, and the and E part. I mean, especially climate-related part is measurable and also scalable, while the S and G are somewhat subjective and hard to quantify. And according to some professor, we will not hear ESG maybe 10 years later. We will hear sustainability finance. What would be your opinion on it?
Okay, well, it's a really good question because I don't usually use the letters E, S, and G. We talk about responsible investing or sustainable
Sure.
investing. I think I'm about to get a flag that we're running out of time. And you don't have time for me to talk about my pet topic, which is antimicrobial resistance. But that is a systemic risk as big as climate. So we need to think about all of these topics.
Sure.
We have data on some, we don't have data on others. But if we're specific, these are all about things that will impact the value of our clients' investments. And those investments are about funding their long-term future. So we need to think about this. If it isn't about that, then as an investor, I shouldn't be focused on it.
Okay. One more thing. Many people are talking about carbon pricing carbon, but there is a big difference. The price of carbon, especially with the EU and Korea. Korean carbon is 10 times cheaper than the EU's. But what will be the ultimate future of the carbon price? Will we have a kind of universal single price in the end?
Should we have one? Yes. Will we have one? I don't have that crystal ball. I'd like to believe we will. And the prices we see today are nowhere near the real price of carbon. It is hundreds of dollars.
Yes.
And we are not near that yet.
If
Microphone.
Okay. So, do you see the close relevance between green finance and carbon market?
I do, because actually the pricing of how you finance a green project and the value that that green project delivers in some way, shape or form has to be related to either the carbon that you are using or the carbon you are not using or creating. So you have to relate those, and over time we'll see much more of that.
Okay, thank you. As we have just 1 minute, would you have a kind of wrap-up message to Korean audience and your business partner in Korea?
Absolutely. So I'm very excited. I'm an optimist. Yes, of course, 1.5 degrees looks very challenged.
Challenging.
But if we don't address this in economies that are growing fast, if we don't address this in economies that have the most opportunity to change, then we won't get there. And I think Korea has an opportunity to lead in this space.
Thank you. I think I have to admit that we are not where we need to be. But I assure you, Korea will be a really relevant country for the future we are making together. Thank you for being with us. It's a great talk, and thanks for your stewardship.
Well, thank you very much for inviting me.
Thank you both so much for the very insightful and inspiring conversation. And Michael, we will definitely invite you again. Please check my emails. And okay, and now as climate issues becoming more important than ever before, global institutional investors are finding their ways to contribute to address climate change. As we now move into the panel discussion, we will also be listening to different investors sharing their strategies. Now I would like to pass the floor to our moderator, Jin Zhong-ro, Head of Industry at Solutions of Our Climate. Thank you.
Hi everyone. It's very honorable to be here. It's first time for me to be at COP, and it's also first time for me to moderate such a big session as well. But anyway, we gathered here to discuss very important topic to combat climate change from the investment perspective. Here we have the very important guests from UK and also from Korea. And Chris, you are also from UK. I am, yeah. So we are union of two countries today. Yeah. So anyway, I'm Jin Sun-ro. I'm leading the industry team at SFOC since last February. My industry team is working on to accelerate the industrial decarbonization in South Korea, especially in steel and shipping and methane area. So for industry, it's valuable to understand investors' concerns and directions regarding carbon neutrality. So let me introduce this panelist first. Firstly, we have here Leon Kam-hee from Federated Hermes Limited. Federated Hermes Limited is one of the leading global asset management firms. Leon leads equity ownership service, Federated Hermes stewardship service in public market for their clients.
Thank you. Do you want me to introduce more?
You can add it if you like.
Yeah. So as you said, I head up what we call responsibility for Federated Hermes Limited. That covers EOS,
Yeah.
the stewardship service. Also covers what we do from an integration point of view, and also our advocacy efforts.
Great.
Yeah.
Thank you. And next we invited Chris Dodwell, who is the Global Head Policy Advocacy at Impax Asset Management. Impax is a special player in this field as they focus on opportunity arising from transition to a sustainable economy. Can you elaborate more about yourself and your company?
Yeah, sure. So yeah, I am from the UK, but Impax is a kind of an international investor. So we have about 300 people working with the business now. 100 of them are in the US, and we've got a team in Asia. We've just opened an office in Japan. So I'm from the UK, but Impax is broader than that. I guess what's a bit different about Impax is that we are wholly focused on opportunities arising from the transition to a sustainable economy. So the business started 25 years ago with a small sort of 50 million investment from the IFC around, opportunities in Africa and India, actually, as it happened. And now we're managing around 1,000 times that amount of money, so $50 billion. And as I said, it's all going into solution providers, really. So a lot of those are in climate change space. And this isn't for just impact. We're not an impact investor. We're actually looking for performance. So we were founded with this conviction that this market was going to really grow and outperform the rest of the market. So what we think we can do is, by being specialists focused on the transition and those opportunities, we can actually beat the rest of the market. And so far it's worked out pretty well. We are investing in adaptation solutions as well as mitigation solutions. So I think that's quite interesting. And we've been operating in Asia for about 10 years. So as I said, we've got office in Hong Kong. We're investing in Korean companies. I'll say something a bit around how we sort of engage with those maybe in a bit later.
Great. Thank you very much.
And I would also say we are investing in the S as well as the E. So, we've just launched a social product actually just last week, which is focused on companies that are making contributions on social sustainability issues.
Great, thank you very much, Chris. We could really understand changes and a new trend from your company as well. And finally, we have a representative from South Korea. She is basically a manager in Carbon Solutions Department at Korea Investment Security. And she is working on carbon credit. Her name is Ji Yoon Kim. Please.
Thank you for introducing me. Hi, this is Ji Yoon Kim from Korea Investment and Securities. Sometimes people might confuse it's public or government company, but we are very pure private company. My company is the only and first financial institution is in Korea covering fully covering the overall carbon market. So we are doing market maker for KETS market, and also we invested VCM projects, 3 of it, and also currently we got supported from Korea Environment Corporation. They provide some money for feasibility study for ITMO. So we basically covering all the carbon projects. Also, these days we are trying to expanding our business model to impact investing. So yeah, that's brief introduction.
Okay, thank you very much, Yoon. Actually, it's long enough. Today we have now 23 minutes. This discussion will consist of 3 parts. Our first part will normally be mostly focusing on general activities of your company regarding climate change. And second part, we're gonna compare the indicator to understand the decision-making process of your company. And final part, basically, we're gonna compare the 3 different companies' contexts in different locations, such as in UK or in Asia or in Korea. So we're gonna start first part of our discussion. The first question comes to Leon. As an institutional investor, what are your general expectations on investee companies' climate risk management in general? How does Federated Hermes perceive the climate risk and opportunity of the East Asian and more especially the Korean climate? Korean capital market.
Okay, so I'm going to sound a bit like Michael now. So what do we do in our climate engagement? Initially, probably 15 years ago rather than 8, we were asking for disclosure. Why? Because you're looking to see the company to set out its stall in terms of what it's done and then what it might do in the future. The reason is not for disclosure for its own sake, it's to try and push for action. And in the early days, it was really the idea of sunlight being a good disinfectant. So if people have to say what they're doing, then that might create shame or might create an impetus in a more positive way for change. And we also looked at governance at the time as well. Was this an issue which was being discussed at the board level? The idea being if it was discussed at the board level, it would be giving a certain amount of importance. But all that they're just catalysts. It's really about action. And one needs to understand both what the impact of climate change is on existing business models, and then what business models might need to be created in order to deliver in a new world. So if we look at things at the moment, the climate transition, I would suggest, is going to happen. The question is when, and how painful will it be? And so we look to companies to be forward-thinking in the way they're going to approach climate change, because inertia may maximize profits now, but they're unlikely to maximize profits in the future. And we also look very carefully at the business case for climate change within a company. Because if you can latch on to the business case, then everything becomes much easier. I was talking to a US utility company not so long ago, and they were saying, "Oh, we've got our power to 70 or 80% renewable in a certain country, but it's more difficult elsewhere." So I asked the question. I said, "Why are you doing this?" because I needed to know whether they were just doing it to signal virtue or whether they could actually make money out of it. Now, signaling virtue is important because you've got customers and customers are interested. But they said the reason we're doing it is because it is the top priority of all our customers. And so therefore there is a real commercial reasoning. So we're always looking to understand the interests of the company and try and align those interests. Because if you get to that point, it becomes much, much easier.
Great, thank you very much. That's very interesting to know that to satisfy basically clients' needs, it's very important as well to emphasize this climate issue for your investment business. So the next question to Chris. We understand that Impact's asset management is very different player in the investment community. Could you share the general investment philosophy and practice of Impact? How does that contribute to addressing climate change?
Yeah, so I touched on some of that in the last question, and I guess what we, going into this sort of attitude of trying to identify those companies that are taking advantage of the opportunities that come from climate change, what we started looking at this 25 years ago, and there wasn't really a map of where those investments lay. So what the team did long before the time I joined was kind of put together a taxonomy, a little like governments are trying to do at the moment, of actually understanding where opportunities lay, what type of companies were part of the renewable energy supply chain, not just the companies that are generating the power, but who are the equipment manufacturers. And similarly on say energy efficiency, so who's making the insulation products. And then when you start to look at adaptation, things like heating, so who are providing the air conditioning units, and how can you ensure that those are very energy efficient? So there's a process there that is basically quite kind of data driven, which is looking, how do you actually identify these solution providers that you can then be investing in? And what Impacts has been doing, as I was saying, is since then we've been very involved in hunting out those opportunities, but then what we'll do is once we've got a universe of companies that operate in that space, we then look for the best performers across that universe, entirely driven by the wish to kind of identify good companies who we can hold in the future and watch as they grow and become more successful. I mean, a good example of a company that might fall into that category is something like Daikin, who are producing air conditioning manufacturers, but are they really doing the most energy efficient? And then we'll use things like engagement processes to try to encourage those companies to become kind of
Do you have also
leading.
technical steps to really analyze this kind of data of your
Yeah, so
target?
we have two. So we have two approaches. One, we have this taxonomy-driven approach, and we'll have we look at the revenues that these companies get from their their sort of clean practices. But we also have something that we call the impact sustainability lens, and with that we look at sectors of the economy that are high opportunity from the transition but low risk. So we want to pick those subsectors, and then once you're in one of those subsectors, we'll then kind of give the asset managers, the portfolio managers, a little bit more discretion as to which companies they pick. But they all have to have this strong narrative around the transition to a sustainable economy.
That's great. It's very interesting to know new kind of more data-driven approach is very important to decide the investment portfolio for a company. So third question come to the Ji-yoon. As a local investor in Korea, what are the climate-related priorities or specific industry sectors you have been looking at?
So we reviewed the hydrogen before, because previous government was like very much into that hydrogen. So not only financial companies, a lot of private companies actually plan for investing on the hydrogen. But suddenly, when the government changed, and then the hydrogen plans everyone just dumped. So this government is focusing on the nuclear power or other like wind, other renewable energies. So we also dropped that hydrogen, but we now focused on the CCS projects. Even though there are a lot of criticisms, still, according to the IPCC reports and other like scientists, still we need CCS projects. So we trying to looking for opportunities not only in Korea but especially the Australia or other countries who can store the carbons in the ocean or like in the ground. But yeah, these are the main specific area we focus on.
Yes, Korea has basically very different context compared with the Western country. We change our government every 5 years, so the policy of investment company cannot also basically continue. Unfortunately, like Ji-yoon explained, we have such a special kind of context. Please understand international guests who are here. So we start with the second part. So basically, Chris touched these indicators and data that you have to take into consideration when you're making decision. But this question can also concern Federated Hermes Limited. So Leon, how is the EOS as Federated Hermes using the net zero transition framework to engage with companies? For example, when putting together a climate-focused engagement plan, what sort of information question would you prepare?
Okay. Also, just to clarify, the UK also has elections every 4 or 5 years.
Yeah.
And governments can change even more
Oh.
frequently.
Oh, that's why we are union now.
And the US as well.
Yeah.
Okay, on your question, I like to think that when we think about company engagement, you're engaging with an entity, which is very unique. So they'll be part of a sector, and there'll be some things which are common for different companies across a specific sector, but the company's context is very specific. And in terms of information or data, it's useful to get some information in order to frame the piece. So if I'm thinking about climate, just to give you examples, you can look at the level of carbon emissions, you look at the level of carbon emissions relative to sales, the so-called WACI. There are some numbers which help you understand it. Then if you compare what that company is doing relative to its sector and to specific peers, you start having some questions. But then you need to see the company.
Sure.
And understand the company context.
Sure.
And you need to do your own research, which adds to that. But also in the engagement itself, you'll learn a lot about the company. So what I would say is the engagement to be successful has to be very company specific. And so measurements are useful, but they're useful, I think, for framing the questions you might want to ask, rather than being the be-all and end-all in terms of the answers.
Correct. Thank you very much. You really answered wisely to my stupid question.
Very good question.
Thank you. So second question for Chris. Basically, you roughly covered this question regarding the data or critical criteria that drive impacts investment decision making. So then it's my personal additional question. When you, for example, looking into the carbon emissions of companies, so is there a kind of verification process if these data are reliable?
Yeah. So I guess what I was describing in terms of the data, the first question was the opportunity side.
Correct.
Of it. So we look at that data in order to identify the particular types of companies that we want to invest in. But in order to actually get onto our A list, the list that the portfolio managers kind of can then pick from, you have to go through an ESG analysis. We do use that phrase. We're now on what we call ESG 2.0. And within our ESG 2.0, we take carbon emissions directly into account. Now, the interesting thing about our investment philosophy is that because we're investing in solution providers, they tend to be in industrial companies, which means that actually the carbon intensity of our portfolios is perhaps a little higher than other investors. Now, for us, we don't think that's a problem because the contribution that they're making by being climate solution providers is actually probably more significant than their own emissions. So if you're, like I say, an insulation manufacturer, that's going to be more than an IT company, but actually they're doing something to accelerate the transition. They're producing essential products. Similarly, a wind turbine manufacturer, it's higher emissions than a bank or a service sector, but it's still doing something worthwhile. So what we do is we actually measure something that we call avoided emissions, which actually is the positive contribution that that company's making. But back to your question on the accuracy of the emissions. So we will go through this process. We will understand the carbon reduction targets of those companies. We will ask them whether they're doing analysis of physical climate risk, because we want to see that they're actually incorporating that into their decision making. And actually in Korea, we met with all of the Korean companies we invest in last year. Personally, we did a trip to Korea. And if people don't meet our expectations, we will effectively, their rating on our own internal stuff will go down, and we will reduce our holding. So, you know, we're using this information to actually directly affect decision making. I think one of the personal things I would suggest is that actually in Korea, there is a relatively low awareness of these climate-related risks. So I do think that Korean companies need to be given a little bit of a nudge. You cannot be insulated from physical climate risks no matter where you are in the world. When I first joined the company, I remember an engagement call we had with a US company, and they said, oh, we don't have to worry about physical climate risk because we're in America. And you kind of think about the experience of the last 3 years, the wildfires, the floods, the heat waves, you kind of go, well, maybe they're thinking about physical climate risk now. And I think the same goes for Korean companies. So we do think that analysis of data and of climate emissions and of targets is a really important part of the process as well.
Fantastic. Yeah. Chris, it's very important lessons for Korean company when they set a carbon neutrality plan, as well as to meet the investment companies' expectations. Well, next question to Ji-yoon. Well, we know that many companies in Korea announced coal phase out, and investment company also basically want to be part of that. But actually, the implementation of a coal phase out plan somehow was not that really meeting our expectation. So what do you think, Ji-yoon? What's the reason of this delayed implementation of a coal phase out from the perspective of investment company?
As Korean institution, I think still Korean financial investors and also companies are considering ESG or climate-related finance as a CSV or CSR project. So that's why they don't, even though they declare the divestment from core, that's kind of big ceremony for them. After that, they haven't really, many of them haven't really set up the criteria, the internal process, like how do we select this project is climate related, this is not. No one want to take initiative inside of the company. So that's why we don't have the criteria, so we cannot really phase out the core project or investment. So I think that's one of the biggest issue. And also, it's also related the term. A lot of CEO or the high-level people, their term is normally 1 or 2 years. So they are really focused on the short outcome, short goal. So they know that world is changing, and they know like the global trend is core will be stranded asset, but for their performance, they just decided to just invest that kind of project so far. But I know like NPS, National Pension Services, they declared a core divestment from core a few years ago. They haven't set up the criteria, so they get a lot of criticism. So if they move, they take the initiative for setting up the criteria, I think that NPS is like a big brother in Korea. So if big brother moves and the rest of brothers are moving.
Thank you very much for explanation of Korean context. It may be very specific compared with the Western and international movement, indeed, but that can be actually very common in Asia, because not only Korea, but many of the Asian countries are delayed, or they are slow to phase out the fossil fuel power plant, especially coal. So when we are coming to the final part, it's more like comparing the example of climate-related investment. So Leon, could you share an example of the positive impact of engagement to address climate change, especially in Korea or East Asia?
Okay, so we are actively engaging with companies in Korea around this. We have seen movement by each of the companies. So I spoke to some of my colleagues who are engaging directly. So if I see, and none of the stories are perfect stories, but that's life.
Right.
So if you think about POSCO, sorry, I can't concentrate. If you think about POSCO, or the steel company, there's hydrogen. They're thinking about how do we draw steel, make steel through hydrogen power. There's the move into electric arc furnaces from basic oxygen furnaces. So there is some movement there, but there is also coal, which is being used.
Right.
And some steels are good with, you can't do it with electric arc furnaces. So there is movement there.
Yeah.
With Hyundai, there's definitely movement with electric vehicles. So that's certainly happening also. And Samsung also have the carbon neutrality or net zero commitments by 2050. The question is, because I look at Korea and I remember when Korea was not the industrial force it is today. It became that industrial force through real investment, disruptive investment. And you can argue whether it was done exactly right or not, but Korea is very different to what it was 50 or 60 years ago. So we're always at a crossroads. Korea is also at a crossroads. Does it want to disrupt and leapfrog, do a second leapfrog, and really embrace the climate changes? It's in the power for Korea to do that.
Right. Thank you very much, Leon. You are not Korean, but you know more than I actually about Korean situation. Well, then, Chris, we have only 5 minutes, so each of you, the Chris and Ji-yoon, have around 2 minutes to speak. So, Chris, how does public policy influence investment? Could you share why and how supporting the development of new policies to accelerate net zero, nature positive transition is important?
Sure. So I spent 10 years working in the UK government before I joined Impacts, and it's definitely part of my role to have a dialogue with policymakers. And you can understand from what I said earlier why it's in Impacts' interest to kind of create these markets. So we think there are 3 things that we've been particularly focusing on. So the first one is talking to the government about breaking down targets into sectoral roadmaps that really allow you to understand the transition and the investment opportunities within individual sectors, but then to focus on what are the policies you need to unlock investment in those sectors. So a carbon price is a good step, but you are going to need much more specific things. So say in renewable power, the issue there is all around planning and permitting and how you can speed up that system and how you can have a grid that is actually resilient and can operate with renewable power using energy storage rather than fossil fuels as a baseload. So there's a kind of specific problem there. The problem with electric vehicles is different, the problem with steel is different, the problem with the food sector is different. So those sectoral roadmaps allow you to do that. Ideally, what you want to do is you want to get the private sector involved in those solutions. So that's the second element, is having dialogues with investors. The UK did this really successfully in offshore wind, and we managed to create a risk-sharing mechanism that basically led to that sector taking off like anything. So the UK's now, we've got something called the Net Zero Council. It's a group where you do those sectoral roadmaps, then you have dialogues on individual sectors about how you're going to scale up the investment. And then I think the last element, coming back to this disclosure piece, is around having these transition plans. And we've been very focused on that. I've been co-chairing one of the working groups of the Transition Plan Task Force. But the important thing to remember there is this is not just about the decarbonisation of your activities or as an investor having a fossil fuel free portfolio. That will protect you from risk, but it won't do anything about systemic change. So we have to get involved as investors in pushing to accelerate the transition, and we do that through engagement activities and through being actively involved in policy. So I think that idea that this is more than just a net zero target for business, but actually how do you make things happen in the real economy as well?
Wow, fantastic, Chris. Really gave valuable advice to Korean stakeholders to really implement the plan for carbon neutrality. So final question to Ji-yoon. Well, I don't really want to speak really long question. Basically, what are some of the risk and investment opportunity to Korean investment companies and managers see regarding climate? What do you feel basically when you're working on this climate issue at your company, for example?
One of the biggest risks is related to what I mentioned before. It's policy inconsistency. So the government keep changing the policy signals. So the private sector or like financial investors, they cannot get the sense, is the government really want to do that or not? Because they are keep changing their policies. So they know the world is changing, as I mentioned, and especially Korea companies heavily depend on export. So like CBAM or IRA, they know these regulations and laws will threatening their business. But government is keep saying that like they have to promote or like subsidize some of the money for them to do R&D on the climate related things. But yes, the government keeps saying that industry is not ready yet. So I heard from some of the company, they actually have the technology to reduce the carbon emission, but they are trying to hiding until the government is giving a strong signal on like reducing the carbon emission. So I think that's a risk. But another opportunity is, of course, all the private sectors knows that this is the global trend, and regardless of the government signal, they have to like invest and do things. I think everyone knows which ministry, but they try to invest on carbon projects. But one of the previous question he mentioned is the carbon price and climate finance related? That's yes, especially as a ETS market maker. The price of ETS is about $10, and the company, my company and other companies, they actually set up some of the business plan, like invest this project, mid-term and long-term. But when they bring that plan to the high level, they said, oh, buying the credit from the ETS market, that's $10. Why you're spending like $30 or $40 per ton? And that's why companies knows that, but they cannot do anything because of the price. The ETS price can give the strong signal to companies to move forward. So
Right.
I think that's the opportunity.
Thank you very much, Ji-yoon. Yeah.
I know we're almost out of time, but could I just reinforce that point
Great,
about policy consistency? So, we are all... I used to be a negotiator in this process. This used to be not about opportunity. You can see now the interests of business that are here. governments should be in no doubt that there are now new businesses who see this as the future and actually they want more ambitious policies. And what we can't afford is to have climate used as a political football and something that's expedient. There is no doubt about the fact that we have to do this transition. And therefore, if we can argue about the details and what particular measures, but don't argue about the direction of travel as politicians, please. We've seen wavering on that in the UK. And even though, actually, when you look at the fundamental policies, they're not changing anything. They're just trying to create political capital out of this and create a culture war. And that is not what we need here at all. So I really think it's important to get back to this idea of bipartisanship, that this shouldn't be a political issue at all.
Yeah, in this place we have honorable guests from Korean government, the member of the National Assembly, Jang, and also the commission on the carbon neutrality, Sang-yeop. So I think today's talk might give inspiration and valuable insight to these guests, and as well as all the guests who gathered in this place. So we want to have question from the floor. Any question? Okay. Okay, yeah. Sorry, we don't have much time. So thank you very much for valuable insight. It's really fantastic. Thank you very much.
Thank you, Jin Sun-nim, and all our fantastic panelists. I really hope I can send you all to Korea and we can have another session there, but that might be a bit too much. So let's see how we can do this. Before moving towards the end of the session, I'd like to welcome our very last speaker, Ms. Kyung-ah Park, Head of ESG Investment and Managing Director at Temasek. Thank you.
Thank you everyone for having me, and I'm sorry I wasn't able to make the panel. I think I was originally supposed to be on the panel with you all, but I had another speaking conflict. So thank you for accommodating my schedule, and good morning everyone. And for those of you Korean, 안녕하세요. 너무 반갑습니다. So what I thought I'd do is I'm going to just very, very quickly walk you through what we're doing at Temasek. And for those of you who don't know Temasek, I'm going to start with a quick intro because in many ways what we're doing is a microcosm of the global economic systems transition that we have to do. And we obviously have to do that with scale and with urgency. So I'm going to talk a little bit about what we're doing and how do we really harness the capital markets to be able to do this. So Temasek was founded almost 50 years ago by the Singapore government, really as a holding company of many of the Singapore companies that we still own today. So we are a very long-term oriented investor. And over the years, we have actually become a global investment firm, but we are still very much anchored in Singapore and in Asia, given that 2/3 of our portfolio value is in Asia. And we have a portfolio value of a little south of $300 billion as of March 2023. The key thing that differentiates us from many of the sovereign wealth funds is that we actually, even though we are owned by the government of Singapore, we independently manage and own our own assets. And with that comes a lot of flexibility, but also obviously responsibility. And I apologize, I did not realize I was not doing the clicker. So there you go. So this gives you a little bit of a color on who we are and the backdrop to what I'm going to walk through very quickly. So our purpose is so every generation prospers. So we invest today with current generation as well as future generations in mind. And that means that as per, I caught the tail end of the discussion, we are exposed to the tail risks that come from the climate challenge, given it impacts the long-term resilience of our portfolio, but also importantly, opportunity. Actually leaning in and accelerating the transition comes with a multi-trillion-dollar market opportunity. And that's where we can have the opportunity to do good, but also do well. And so we have set an ambitious target. to not only achieve net zero across our entire portfolio by 2050, but importantly, to actually halve our portfolio emissions by 2030 on an absolute basis from a 2010 baseline. And given that our starting point was 22 million metric tons, we've got to bring that to 11. But when we set our targets, we were at 30 million metric tons. We have to actually reduce 2/3 of our portfolio emissions on an absolute basis. And we own airlines, a majority owner. We own ports. We also own power companies in Asia, which are quite carbon intensive. And so in many ways, we are an example of the real economy transition that we have to do. And so what are we doing? There is no silver bullet. So again, I heard a little bit about the importance of carbon pricing. And we know that around the world, not every jurisdiction has a carbon price. And those that do have it, it's not significant enough. So what we've done is internalize a carbon externality and put a price on all of our new investments to do $50 per ton, metric ton, for the carbon footprint of our investments. And it de facto acts as a spread from which our investment returns have to meet the additional hurdle. And that means eventually as carbon pricing gets more and more priced in, these companies are going to be more resilient. And that's actually going to go to $100 per ton by 2030 in line with science. Importantly, what else are we doing? So as I said, this is really about the global economic systems transition, and we got to do it urgently and with scale. And so we are harnessing 3 key levers. First is we have to scale climate-aligned opportunities and green solutions, including in innovative technologies that can address hard-to-abate sectors. And so we are investing into companies, including in the global south. So Ola is a good example of a company that's electric vehicles for 2-wheelers in India. And one of the things that we released actually during COP is a report with Leapfrog and with the World Bank CGAP that identified, I think it's over a dozen investment opportunities that actually has a green discount, up to 75% discount. So it's cheaper from a total life cycle perspective and cost of ownership perspective that we can actually deploy into the global south today, right? And I'm not going to go through every one of them, but Forterra is an example of green cement. We know that the built environment needs to decarbonize as well, so we are investing into these innovative green technologies. We also know that we have to work with our portfolio companies. We're not going to divest out of them. So we got to encourage and engage and support them to accelerate their decarbonization journey. And we're doing that by catalyzing and piloting solutions like sustainable aviation fuel is a good example, working with Singapore Airlines, Neste, as well as with the Civil Aviation Authority of Singapore to really pilot and figure out how do we operationalize this and then take it to scale. And we will selectively invest into the brown to green transition or the gray to green transition because as a long-term patient asset owner, we have to lean in, but that has to be done with integrity, where we can accelerate and bring greater certainty to fossil-based energy transition while ramping up clean solutions, given that in Asia, we still have population growth. Energy demand is going to go up some 2.5 times by 2050, so we've got to meet that demand. Energy access and affordability and reliability while making sure we transition from gray to green. And importantly, enabling carbon negative solutions. We know no matter what we do in scaling green, transitioning the incumbent industry, time is of the essence. And so we got to figure out how to actually invest into carbon negative solutions, and we got to do it today. And hence why we set up a platform called Gen Zero that is investing into tech-driven solutions, but also important in nature-based solutions and trying to enable an ecosystem around carbon markets, of voluntary carbon markets, to try to get more capital flow going into these solutions and importantly to the global south. And again, this kind of double clicks into each of these levers. And in the interest of time, I won't go through every single one of these, other than to saying we tend to look at investing into big trends. And sustainability is the mega trend that is cross-cutting. It's the fastest growing allocation that we're doing, albeit from a smaller investment compared to some of the other trends that we've been investing into longer. But you can see the opportunity sets. We're investing into food, ag-food resiliency as well, water, waste, energy, and importantly, materials and the circular economy, clean transportation, the built environment. So these are all the key levers that we'd be able to harness, and this goes hand in hand with the science of the sectors that really need to be able to decarbonize and where the big greenhouse gas emissions are happening. sorry, move backwards. And then just very briefly, I know the panelists talked a lot about ESG as well as on carbon, but the important thing is we have to take an entire systems approach, and that also means across the investment cycle. So not only looking at where do we originate and allocate capital, but how do we integrate ESG across all of our new investments? And it's not just about carbon pricing. We take a look at transition, physical risk, material social elements, and of course governance is really at the foundation of it. Post-investment engagement is also critical in the context of long-term resiliency, but also we're finding in our engagement, it enables companies to create value and become more attractive for investors as well, and ensuring that we have accountability in terms of monitoring and being able to measure. And our engagement model is not a one-size-fits-all because we have a very, very diverse portfolio. In some cases, we do it through convening, through what we call our Sustainability Council with our biggest portfolio company CEOs and board engagement. We will also do one-on-one engagement. We have something called a Climate Transition Readiness Framework that pulls together TCFD, Transition Pathway Initiative, and a number of different best-in-class frameworks to methodically say what does good look like and where are companies in that journey, from governance, strategic integration of risk and opportunity, incentive alignment, all the way through how do you do CapEx alignment and allocation, and disclosure and external verification. And again, in some cases, it is more of a targeted engagement and partnership in catalyzing new opportunity sets. And importantly, partnerships. We're here at COP28 because we want everybody to be able to partner and take greater ambition, action, and accountability. And we know we can't do it alone. And so we partner to complement our capabilities and be able to crowd in third-party capital, because we don't go and raise capital. We do it off of our balance sheet. And so we have a number of different partnerships. And again, I'm not going to talk through each one of this, but the one that I do want to highlight, there's a lot of conversation around blended finance, given that we don't have enough scale of capital flow going, even though, by the way, the capital market is very deep and very wide. It's probably around $200 to $300 trillion in assets out there. But we know that in the global south and hard-to-abate sectors, there's a lot of risk, perceived risk and real risk, both in terms of capacity building, and there was a comment around importance of policy and certainty of policy and longevity of policy. We also need to make sure that there is project development, which is not a place that private sector capital plays a big role in. There's also risks around FX, credit, offtake, etc., that a lot of times DFIs and MDBs can help buy down. But the point is, we need to make sure that we can blend capital to scale in mainstream capital that may not be able to take the same risk-adjusted returns. And so we created a platform called Pentagreen with HSBC and working in concert with ADB and Clifford Capital, which happens to be also a portfolio company, to really look at the marginally bankable sustainable infrastructure projects, be able to de-risk that and crowd in mainstream capital. And on that note, I just want to emphasize, we all have to take greater action, and it does require radical collaboration. It requires us to really take a systems-wide approach. And so I hope that with many of you that we'll have the opportunity to be able to partner, learn from each other, but also be able to really move the needle further in terms of decarbonizing, because this is the urgent issue of our time. So with that, thank you very much for inviting me. Yeah.
Thank you, Ms. Park, for the sharing. And I'm afraid that we must conclude this event now before we get kicked out of this room. Thank you for all the distinguished speakers, panelists, and everyone who have supported and participated in this event. And I would just like to say that connecting investors, companies, and civil society for SFOC work, we are just beginning. We are very, very happy to help providing global investors with relevant information from the ground, and also sharing your insights and your need to the local B companies or maybe legislators from the Korean side. And we hope we will see you soon again. Thank you everyone for coming, and please scan the QR code and follow us. Thank you.